morning and thanks so much for tuning in. This is Stocks to Watch on Bloomberg Quint and I'm Alex Matthew. Hope you had a lovely Diwali weekend. The last time I spoke to today's guest, Pfizer had just announced progress with its vaccine. This week, Moderna has announced even more progress with its vaccine. Mayuresh Joshi of William O'Neill is joining me today. Mayuresh, I can only hope that by next week, this time, the coronavirus will be behind us. But jokes aside, thanks for joining me this morning. I want to start by asking you about BPCL. DIPAM Secretary Tuhin Kanta Pandey said yesterday that multiple expressions of interest have been received by the transaction advisor that's looking to facilitate the sale of the government stake in the company. But we're yet to see anything concrete when it comes to the privatization of BPCL, and we've had the window for the expressions of interest to be submitted actually being postponed several times. That's got a few investors on edge. Do you think that the commentary from the government is positive, and how would you treat BPCL from this point?
Morning, Alex. Thanks for having me on your show in the first. Very, very happy Diwali, and hope that this new Samvat is healthy, wealthy, and brings a lot of prosperity as well. I think the vaccine news which came through, I think hope that comes through, that creates a huge amount of positiveness around us. For BPCL in particular, the progress in stage 2 would be taken positively. But again, there has been a lot of speculation, and it is rife with speculation on who has bid, who has not bid. And therefore, who probably comes into the fray for the final bidding of its assets remains extremely critical. Second, I think if you're probably looking at the overall market share, right? 15.33% of the refining market share, 22% of the fuel marketing share. It's pretty huge. For a country where I think the consumption trends will keep on going higher. What happens with the Numaligarh refinery, because the carving out of that is extremely critical. But the buyer or the interested bidder will get to retain the Mumbai Kochi and the Bina asset as well. What happens in terms of the divestment target set from a government perspective, I think the BPCL sale stake through is extremely critical. I think it is probably there in the news, but till there is some amount of affirmity which goes through, because there will be RFP process which goes in the next 3 to 4 weeks. What probably comes through in terms of the final bids being put through and at what valuation will ultimately decide the course for the action as well. I think need a little bit of price action for this stock going ahead in terms of the ruling methodology, and wait for the news to probably just come out a little bit more in terms of clarity on all these aspects.
It has, in fact, bounced back from that low point after that disappointing move ahead. But let's talk about ONGC now. And the results came out, over the weekend. You have revenue that came in at 30% higher, 16,917 crore, just below the consensus estimate. The net profit, however, was higher than estimated at 2,878 crore. But margins, Mayuresh, came in at 41.3% compared with 36.7%, and that's lower than the consensus estimates of 44.2%. Now, those are just the headline numbers. I'm sure you've seen the numbers in more detail. What do you make of Q2, and what are you looking forward to for the rest of the financial year?
So the volumes for ONGC, Alex, were pretty reasonable. So if you look at the crude production, both domestic as well as the overseas contribution has been quite reasonable. The second part also has been the gas production itself. The gas production also has been quite reasonable, both in terms of gas produced on its own and through its JVs as well. However, I think with crude prices coming down, and you probably have a year-on-year comparison at $60 in terms of realization for last year compared to around 41.3 for this year itself, there was a massive fall in terms of crude realizations. And similarly for gas realizations as well. On a GCV basis, we probably look at 3.69 last year and 2.39 this year. I think that is where the effect came out in terms of the overall realizations and therefore the poor performance on gross margins and the bottom line as well. So there is every expectation that the gas prices and crude prices might be hovering around these ranges, might improve a tad bit, which might create a sequential improvement in performance. But the overall dynamics on a YOY basis and an annualized basis as well might still remain on the softer side. Dividend yield might still remain strong because of the payouts that these PSUs might give out. But in my opinion, again, I think we would probably stay away from energy stocks, at least at this point of time, because the EPS rating, the RS rating, the overall master score as per the Cancelim and the O'Neill methodology probably is not fitting our criteria at this point of time. And the pain thought probably might persist, as I said, fundamentally for some length of time.
At some point, I'm going to have a conversation with you, Mayuresh, about which PSU companies you like at some point. But for now, I'm going to go to Tata Steel, which is the last pick for today. And again, Tata Steel posted results over the weekend for the second quarter. The revenue was up about 7% at 37,153 crore. That was higher than estimated. Net profit is down about 60%. That was to be expected, though. And it's come in significantly higher than the consensus estimate at 1,546 crore rupees. I think what a lot of people would be enthused at would be that margin number of 16.4%, which is, again, significantly higher than the estimates of 12.1%. And Mayuresh, I think that might have something to do with the second quarter being a little weak as far as raw materials would have been concerned, and that would have aided that profitability. But how are you looking at the numbers as a whole?
The numbers are very good, Alex. So there are no two ways about it. Margin performance was extremely good, and you're absolutely right, both in terms of input costs going down and realizations actually moving higher. So I think the gross margin effect was very, very significant on both these aspects playing out. The second element, obviously, is the expectations in terms of the deleveraging of their balance sheet. So what happens outside its UK arm, and if there is a successful stake sale happening, further deleveraging will improve the overall debt to EBITDA position for the company. The third, in terms of HRC, CRC prices moving higher, rebar prices actually moving higher for the sector as a whole, and demand coming back. I think that is something which will play out very, very positively for these players. The fourth aspect, Alex, which is critical for Tata Steel, is that they are completely integrated on its iron ore. So when you're probably looking at iron ore prices moving northwards, it probably gets shielded to a certain extent. Though coking coal prices might still need to get passed on if they move higher. And the fifth and most important part, with all these aspects playing together, the cash flow improvement can be quite significant going forward as well. So with conditions opening up, global conditions opening up, the news of vaccine, economic activity, which was dampened in the last 2 quarters, might pick up steam in the next year as well. I think steel companies, ferrous companies probably are looking good. From our O'Neill methodology, again, I think the RS rating is extremely good. The price strength has been good. The EPS rating will show signs of improvement because of the N factor at play. So yeah, anybody holding on to Tata Steel should continue.
So, yeah, but what if somebody is not holding on? Would you say that this is still a good opportunity to buy, seeing the stock price having recovered from the lows that it saw earlier in the year? Would you still say it's a good opportunity to buy?
So our methodology works a little bit differently, Alex, right? So I think it's moved up around 15% from our key pivot levels at this point of time. So our own take would be that if it pulls back to its DMA, finds up 50 DMA, finds support there with lower volumes, it comes down, finds support, and then starts moving higher. I think that pullback towards 50 DMA in an advanced strategy can work out in favor of investors wanting to continue.
Understood. All right. It's always a pleasure, Mayuresh. Thank you so much for joining me and sharing your views. I wish you a very prosperous day, week, and year ahead. And to you, dear viewers, thank you so much for tuning in as well. I have the same wishes for you as well. Thanks so much for tuning in. And there's a lot more coming up in just a